Have you ever been scrolling through home listings? You find the one, it's perfect, and then that little voice in your head whispers, but what about my credit score? It's that sinking feeling, right? Well, today we're going to talk about why that fear might not be the brick wall you think it is. We're going to look at the real path to owning a home, even if your credit has a few bumps in the road.
Hey everyone, welcome to Chima Invests. Our whole goal here is to take these big, complicated financial topics and just make them simple. We want to give you clear, straightforward information you can actually use to build the future you want. And let's be honest, for a lot of us, buying a home is the biggest financial step we'll ever take. So let's get right into it. So let's just go ahead and tackle the elephant in the room. This is the question that keeps so many aspiring homeowners up at night. Is that one little 3-digit number the final say? The ultimate deal breaker that stands between you and your own front door? That fear of getting rejected is so real, and honestly, it stops a lot of people from even trying.
But here's the good news, and it's a big one. That number is not the end of the story, not by a long shot. You see, lenders are trained to look at the whole you, the complete financial picture. Your credit score, think of it as the cover of your book, not the entire novel.
So here's our game plan for today. We're going to start by busting the whole bad credit myth. Then we'll look at what your real financial picture looks like to a lender. After that, we'll explore the different roads you can take to get a mortgage, talk about some solid strategies to boost your chances, check out some creative financing options, and then we'll wrap it all up with your next steps. All right, first up, let's talk about the bad credit myth. It's time to really dig in and figure out what lenders are actually focused on when they're looking at your application. And look, if you're worried about your credit, you are definitely not alone. A report from Bankrate found that almost a quarter, 1 in 4, of people who don't own a home believe their credit just isn't good enough. That is a huge number of people, millions, who might be putting their dream on hold because of this one single fear. And this quote from Bankrate really hits the nail on the head. While your credit score is the first factor mortgage lenders consider, it's not the only piece of the puzzle. A lender's job is to put together a complete puzzle of your finances, and that score, it's just one piece. A very important piece for sure, but still just one. So, if the score is just one piece of that puzzle, what are all the other pieces? What does your complete financial picture actually look like to a lender? Let's try and understand what bad credit really means to them. Because, it's not a personal judgment on you. It's all about assessing risk. Okay, let's look at the standard FICO score ranges, because this is what most lenders use. You can see anything below 670 starts to fall into that fair or poor category. And yeah, this is where getting a typical loan can get a little trickier. But, and this is a big but, this is exactly why many of the government-backed loan programs we're about to talk about were created. So tricky absolutely does not mean impossible. And this is where something called manual underwriting becomes your best friend. So if the computer system automatically flags your application, maybe because you're self-employed, or you just changed jobs, or you had a medical bill go to collections a few years ago, it doesn't mean you're out. It just means a real person, an underwriter, is going to take a closer look. Think of it as your chance to tell your side of the story.
So what is that human underwriter looking for? Well, they're looking for stability. A long history of paying your rent on time, that's a huge plus. They'll look at your debt-to-income ratio, or DTI. It's just a simple calculation. All your monthly debts divided by your monthly income. They want to see that you can comfortably afford the new mortgage payment. They're also going to look for cash reserves. Having a few months of mortgage payments saved up shows you have a safety net. And maybe most importantly, they'll look at the story behind any credit problems. A letter explaining what happened can make all the difference.
Okay, now we get to the really good part, the actual solutions. Let's walk through the different pathways to a mortgage, because there are specific loan programs out there built for people who don't have a perfect 800 credit score. This little chart here lays out your main options. A conventional loan, that's the one most people think of, usually wants to see a score around 620 or higher. But look at the flexibility you get with these other government-backed loans. An FHA loan can go all the way down to a 580 score with just 3.5% down. Some lenders will even go down to a 500 score if you can put 10% down. Then you have VA and USDA loans. For veterans or people buying in eligible rural areas, these loans often have no official minimum score. The lenders usually look for something in the 580 to 640 range. And let's just pause and talk about the most powerful number on this screen, 0. For eligible veterans using a VA loan or buyers in qualified rural areas using a USDA loan, the down payment is 0%. Nothing. That alone removes the single biggest roadblock to homeownership for so many people. It's a real game changer. Okay, so now you know what's out there. Let's get proactive. This next part is all about the real, concrete steps you can take right now to make your application stronger and really boost your odds of getting that yes.
One of the best-kept secrets in the mortgage world is something called a rapid rescore. This is not your typical credit repair that takes forever. This is like a fast-forward button. Let's say you pay off a big credit card balance or you get an error removed from your report. Your lender can take that proof, send it directly to the credit bureaus, and get your score updated in just a few days. This is huge. If you're just a few points away from qualifying for a better interest rate, this could be the exact tool that gets you there.
Now, let's look at two more heavy hitters. First, a larger down payment. The more money you put down, the less money the bank has to lend you, which lowers their risk. It basically shows them you have some serious skin in the game. The other option is getting a co-borrower. This adds their income and their good credit to your application, which can dramatically improve your borrowing power. But just remember, this is a massive commitment. A co-borrower is just as responsible for that loan as you are.
But, what if a traditional mortgage just isn't in the cards for you right now? That doesn't mean you're out of options. It just means it's time to get a little creative and think outside the traditional mortgage box.
The most common way to do this is with what's called seller financing. It's exactly what it sounds like. The person selling the house essentially becomes your bank. You and the seller agree on all the terms, the price, the interest rate, the payment schedule, and you make your monthly mortgage payments directly to them. It can be a win-win for both sides.
And there are two main ways this usually works. With a land contract, you get an immediate ownership stake in the property, and you start building equity from day one, even though the seller technically holds on to the legal title for security. The other way is a lease purchase, which you've probably heard called rent-to-own. Here, you're a renter first, but you have a contract giving you the right to buy the house later at a price you've already agreed on. A big difference is when you start building that equity.
Wow. Okay, we have covered a lot of ground here. So let's bring it all home. This last section is all about building your own personal action plan so you can move forward with real confidence. Here it is, your step-by-step checklist. Number 1, go to annualcreditreport.com and pull your free credit reports. Look for any mistakes that might be hurting your score. Number 2, focus on paying down your credit card balances. That lowers your utilization and can give your score a nice boost. 3, keep saving. Every dollar helps for the down payment and closing costs. 4, think about which of those loan types we talked about, FHA, VA, conventional, seems like the best fit for you. And finally, number 5, the most important step. Take all this knowledge and just go talk to a mortgage lender. That's the only way to find out what's really possible.
And if you take away just one thing from all of this, I hope it's this. You don't need to be perfect, you don't need a perfect credit score, you don't need a huge pile of cash. What you need is the right information and the right team. It's all about finding a good lender who knows how to put your file together in a way that tells your best financial story. Your dream of owning a home is absolutely achievable. I really hope this helped clear things up and maybe even made that dream of homeownership feel a little bit closer. If you found this useful and you want more financial insights to help you build your future, do me a favor and hit that subscribe button for Chima Invests. Thanks so much for watching.